China is one of the biggest world markets for iron ore, and our next guest has just signed an agreement to supply the next 2 years' worth of production to that country. He is Ian Finch, CEO of IronClad Mining. Ian, thanks very much indeed for joining us today. Let's start with this marketing deal with China, with the OMS group. How does that affect you? What's the significance of it?
Well, it's very significant. We have been dealing with China for some time, and if you're dealing with individual steel mills, then there's really you're at their behest. They will send a ship for the ore whenever you want wherever they want the ore. That's a problem in terms of cash flow. It's a term in terms of our mining rate, in terms of our storage rate at the port. The deal with OMS means that they will be sending us a regular supply of ships. We will be filling the regular supply of ships. They will, more importantly, be supplying 95% of the cash, agreed cash of each shipload. The shipload will then go to China, to a stockpile in China. From that stockpile, OMS will then source end users from about 13 or 14 available steel mills. So you can see the advantage of that. For us, it's a cash flow positive benefit. If there is a benefit in the price ultimately in China, then IronClad benefits from that as well.
Okay, several other major announcements in the last month or so. You signed what's called a native title agreement with the Gawler Ranges Native Title Claim Group. Why is that significant?
Well, because you can't go anywhere unless you take the community with you. And not only the native title or the indigenous people of the area, but also the other local communities. We have a township just to the south of us called Kimber. They are very keen to, the Shire of Kimber is very keen to go along with it as well. So it's all part of the development of a mine. Particularly these days, the native title agreements tend to be very, very important because one can't move on to the full-fledged mining license applications until that deal is done. So it's a very, very significant deal. Takes us forward a long way.
Okay, and perhaps the most important announcement of all, of course, a significant upgrade to the JORC compliant resource at Wiltshire Hill. Where do we stand now?
Well, it's an upgrade in as much that we've added a few million tonnes. That's not the significance of it. The significance is twofold. One is that we have increased the, if you like, the confidence levels of it. So the most of that resource is now in what we call the indicated category and will be readily convertible into a reserve. Secondly, we announced yesterday, or last night Australian time, that within that resource we have some 10.2 million tonnes of what we would call direct shipping ore. And this is the key to IronClad. We will be one of the very, very first companies to be direct shipping magnetite as an iron ore. And that recent announcement is a very, very significant one.
Okay, so what are the projected production levels for 2011, 2012 and beyond? Okay,
well, as most newer producers found, there's a ramp-up period, what we call a ramp-up period. Our target is 2 million tonnes per annum. We can get 2 million tonnes per annum through the existing infrastructure. There will be a ramp-up period in the first year of up to that 2 million, but it will probably be around about 1 million that first year. Thereafter will be 2 million tonnes per annum for a period of about 5 years.
And does all of that go through this agreement with OMS, or are there other?
The first 2 years does. Then we can review it. The 2 years is at our behest. If things go well, then we'll renew that with them.
Okay, you've raised $7.5 million this year. What's the cash burn? Does that money get you through to the start of that OMS agreement?
Just about. The $7.5 million that we have at this point in time is to do two things. One is to complete the definitive feasibility study, which is due in about 6 or 7 weeks from now. And secondly, we have on the table a number of what we are calling early works. And that means the sort of local roads, the beginning of the bore field equipping, the water storage equipping, and just the local works that will demonstrate to the local community that we are serious and that we're on our way.
The share price has drifted somewhat lower from the peak earlier in the year. Do you feel that you're undervalued given, I mean, you've talked through a whole load of positive news. Do you think there's a bit of a disconnect?
There is a massive disconnect. Any CEO would say the same thing. The problem is, of course, we've been through one, possibly two, major price corrections. In any case, we we had a share price which 3.5 years ago listed on the Australian Stock Exchange at $1.47. We now, having spent $25 million and de-risked it to a huge degree, are sitting with a share price of 95 cents. So if anybody can make any sense out of that, then let me know, and then we'll both know.
Okay. Final message then for the investors. When are you going to make money?
Well, at the moment, the kick-off time is about April, towards the end of April, early May of next year. That's about, by my calculation, about 7 or 8 months away. And that will be when we turn the first sod. And we're all looking forward to that.
Okay, Ian Finch of IronClad, thanks very much indeed for coming in today.
Thank you very much.